Welcome everyone. Today we have with us Kumar Saurabh sir. Most of you already might know him by his YouTube channel and Twitter handle called Scientific Investing. He previously worked at Ernst& Young as manager in data analytics in the field of capital markets and banks. Now he's the founder of Scientific Investing. He also has YouTube channel and his courses on website. All his social media handles are in the description below. You must check it out. Welcome on the podcast, sir.
So thanks a lot, Jay. And it's great, to be with you here. I still remember, I think 8 or 10 months back, we interacted for the first time in Twitter. And, I've been seeing you, I realized, okay, this boy is special and it is great to see, the way you are reaching new heights. Very good in terms of whatever you're doing off the market in the academic side. So my best wishes to you and glad to be here.
Thank you, sir. I still remember those 8 to 10 months back, right? I think you were my first follower on Twitter. Until then, no one followed me.
I'm glad I was.
Thank you, sir. My first question to you is, sir, what was your whole academic education like, and how did you, in the end up at being at Ernst& Young, working at Ernst& Young, and what were your previous work experiences before Ernst& Young?
Yeah, so currently I'm fully dedicated to my venture scientific investing, and prior to this, I was with EY. So my academics, I finished my engineering in 2005. I did BTech in information technology. Then I worked with TCS for 3 years, and I come from a very tier 2, tier 3 background. So for us in 2005, getting into a software job, that itself was big thing.
Big thing.
And I didn't have much idea of career because getting that job itself was big. And still I remember I worked for 3 years in TCS, and then I thought of going for MBA, and that is a story I will tell. But I still remember when I decided to go for MBA. So I went to my village, and this is the kind of statement I got from my cousins and all. Tata ka naukri chhod ke MBA karne ja rahe ho. So in our cities, a TCS kind of job it is considered as Tata's job, and still not much we have seen in terms of people getting into private sector and doing jobs. In fact, my family, my father was into government sector, my brother has been in government sector. So that was a change. And this whole decision from quitting TCS to doing MBA was, I got into stock market for the first time in 2007 at the
But what the MBA couldn't you have done with the job existing, or until then there was no option to do it simultaneously?
I think those things became popular after that.
Correct.
Most of the times it was like on everybody's mind ki IIM se karna hai, XLRI se karna hai, which is usually a full-time program. And I think their executive programs, they started later on. So that is when this 2007 stock market thing happened. And I think it was very popular. Slowly it was getting popular in offices. So people were opening accounts, and I still remember me and my roommate, we used to watch CNBC and we used to buy things. And that went for 6 months, and then the whole bubble burst. But I think even before that, the kind of stocks I had, everything would have tanked even without a bear market. But then I realized कि okay, accounting एक चीज होती है, finance एक चीज होती है, we need to understand all of this. And somewhere that curiosity led to कि if I have to master it, then I need to do a MBA. So that is where I went for MBA. I did my MBA from NMIMS, finished in 2010. And that was like the bear market. I've seen my seniors struggling for a 20,000 rupees job. And before that, people went for 9 lakh, 10 lakh mean salary. So that was a very bad time. And I got scared a little bit because in my whole family, there's no, private sector background. So I just tried to go for whatever job is available. And I got a job more around market research, not in finance. I did.
What are the normal jobs that MBA students get?
So it depends. If you are into core finance, you can get as a equity research analyst. You can go as an investment banker. You can go into corporate finance function. You can go with rating agencies as a research analyst. So these are the, or even in my time, that time I remember HSBC analytics team came on campus for financial analytics. And I will tell you, during that time, nobody wanted to participate. Like nobody knew analytics could become so big. I mean, it just, you look 10 years back and you think things have,
now everyone is looking for data analytics.
Exactly. So I got into more a market research job for 1 year, but then I shifted to a core finance job after 1 year. I think I kept trying and I got it. And then 3 years I worked in core finance.
What is core finance? Basically, what's your...
When I say core finance means my work was basically to do financial due diligence we were assisting one of the wings of Government of India in terms of sanctioning equity and
Got
debt
it.
loans
Got
for
it.
education ventures. Then I worked in the risk analytics division in terms of identifying project management risk for some of the infrastructure projects and all. So I worked in finance for 3 years, and then I shifted to analytics, and that was like a complete shift. The only background, because I came from a software background, so I was mentally okay to
Correct.
again get back to coding.
Yeah.
And I quite liked it because there was a flavor of business, there was flavor of technology, and having both MBA and BTech degree, I
Correct.
could associate with it. But there was another different kind of learning curve because you needed to again learn Python and
Correct.
R and machine learning and all of that.
Correct.
So all this stock market thing, even though I finished my MBA, I started understanding little bit of finance. I could never dare to,
That's it.
enter with, full into, because I didn't have that amount of time
Yeah.
which is required to be spent
Okay. Fine.
because of this machine learning and
Correct.
analytics learning curve. So it took almost 8 9 years, 6 7 years to again make a re-entry. So like in 2015, and when I felt that okay, career wise things are stable, I have
So,
learned decent, then I thought of shifting my mutual portfolio back into direct equity and handle on my own. And in 2008, when I was there in the market, there was a portal called the Equity Desk, which Mr. Basant Maheshwari he used to run. And because he got into advisory, he closed that portal. And that time, I think Ayush Bhai, Donald Sir, all of them, they were parting out and they were looking to create Value Picker, because I remember. So in 2015, when I wanted to get back to invest direct in equity, I remembered there was a mail which had come to me 4 years back that we are starting Value Picker. So first thing I did, I went and I searched for that mail in my mailbox. Is like I remembered the name, and then I went and then I saw that website is like something else, and so much of
Correct.
interesting discussions happening.
Until like this was 2011 or what? Because Value Picker started in 2010, 11, something.
Yeah, so I remembered that there is a mail I got in
Got it.
2011, but I checked that mail in 2015 in order to act on it. And then when I went, I saw so much of discussion is happening and all, and few people I knew from 2008. So I was a ardent follower of Hitesh Patel. Because even in TED, I was seeing he was doing fundamental, he was doing technical, and I was like, oh, this man knows both the things. So I saw he is actively contributing there. So next 2 3 years of lot of learning happened on the Value Picker forum, just going through all the threads. So first thing I did is next 2 years, I just went through each and every quality thread and tried to extract most out of it. Again, started learning back to books, investing books and all. So that is how again the journey started. And in last years, 8 years, I knew where not to invest, what are the bad things to ignore, what is the importance of finance, how to learn, how to read a P&L balance sheet. So all of that helped. And I think that previous cycle experience plus the academic experience plus the industry experience plus the live discussions on Value Picker interacting, all of that helped. And then the journey started. And in between, I was working like a full-time employee. So I was working with HP, then I worked with DXC, I worked with VMware.
All related to machine learning?
Yeah, all related to analytics and machine learning. And then I shifted to EY in 2019, and then last 2 years were with EY. So the whole stock market journey and job, it was going parallelly for almost 10 12 years. And then since 2015, I am active in the stock market itself.
How are you used to manage between those two? Because you said, right, the learning curve was you had to learn all these from scratch, and then you started learning about stock markets when you thought that now I have learned enough of machine learning, now I can give little bit time to it. So how did you time manage between those days when you
Yeah,
were?
so 2013 to 15, when I shifted my career from finance to analytics, I didn't touch stock market. So those 3 years were totally dedicated. I did some 10 15 certifications in data science, machine learning, all of that. Only when I felt okay, now the learning part is now normalized. Now there is a job which I can manage 9 10 hours of job. Then every day spend 2 3 hours on the stock market side by reading, and weekend you have got enough time to do. Also, I think luckily that time the job was not that hectic, like 12 13 hours a day. I think 9 hours of focused attention, and I think I was done. So I could extract 2 hours daily, and then I had the whole weekend. Those days I didn't have kids, so I had enough of personal time to dedicate on all of this.
Yeah, got it. How do you think MBA and your BTech degree helped you in these in your current job of data analytics and machine learning?
Yeah, so actually both of them, they have played a very important role. So MBA gives you outlook towards the
Correct.
business, so you
Uh-huh.
understand businesses, you do a lot of case studies. The whole finance, because of MBA, you get a job, you are exposed to a job which teaches you core finance, industry practice and all. So that is more on the business side. The engineering side is I was always, okay to code.
Okay.
And also I believe somewhere engineering gives you that problem solving mindset and all.
Mindset. Yeah.
So I was open to look at different things, and even as a data scientist, if I could succeed, only because I had some background in coding. So I'm still a jugadu coder, I am not a software engineering coder. But because of that experience, it could happen. And because I was in data science, I feel there was one thing: I never had biases towards investing or trading style. So whether it is a long term investing or short term investing, whether it is trading, I I looked everything from a data perspective, and
Got
my
it.
view was a fundamental data tells a different kind of story. A
Correct.
technical data, trade data is different. There are different drivers which fundamental data brings. There are different drivers which trade data brings. So it's not like they're this is good and this is bad.
Correct.
It's just that they bring different kind of value to the table, and we need to understand the kind of value they are bringing on the table. Are we interested in that value depending on our investing or
Correct.
trading style or not?
Correct. Correct.
So I think all of this help to have an unbiased view, to learn multiple things, to automate things. So a lot of investment nowadays I'm doing a lot of algorithmic automation and all. So my technical skills help to do that. My MBA skills helps to understand businesses relatively easier. So that is how both of them are value.
So that was the point you mentioned, right? Because you are unbiased between the fundamental technical, you could extract good information from both of them because
Yeah,
both
and
are
if we can
anyway
leverage both
interconnected.
of them, that's a added. So 1+1 can be more than 2 when
Correct.
you know how to leverage both of them.
Correct. Correct. And both brings different perspectives towards a particular investment. Like for example, if there is a company who was not giving good disclosures, now they have released a filing which in which they have given a lot of disclosures. This could mean move the price volume data which can be shown in technical. So both of them to tells you a good picture of both other sides, and you can combine them to form a good frame, something image like thing.
Yeah. So earnings is a driver, but earnings is a long-term driver.
Correct.
But for stocks to move in 6 months, 9 months, it's not only earning. There could be a lot
Correct.
of other factors, and that is where the trading and technicals and all come.
Then how did the scientific investing start? So at what point and what was motivation to start scientific investing?
Yeah. So this happened somewhere in 2018-19.
Hmm.
So I started dabbling with data in 2016.
Mhm.
And first I started building a lot of these quants and all on the fundamental investing side. So I took
Can you
all
explain
the
quants to in simple language?
so quants is basically you do a mathematical analysis of the
Huh.
data. You try to derive insights using the numbers. So when you build a screener, that is also quants,
Correct.
because
The
you are trying to
parameters.
quantify something.
Correct.
So whenever you take a qualitative hypothesis, like let's say your hypothesis is debt-free companies are good companies.
Mhm.
Now, how do you quantify it? So what do you mean by debt-free? Do you mean exactly zero debt to equity or less than 0.2? And what do you mean by good company? Does it mean giving 10% CAGR over last 5 years or 15% CAGR? So taking a qualitative statement and then quantifying and then proving it with the data, whether this statement is right or wrong, that is what quants is all about. And then you can use it for various purposes, whether the purpose is to find investing opportunity, trading opportunity. You build such hypothesis, you do your data experiments, you identify a scenario or a rule or a algorithm where it will work, and that is what is quants. So consciously or unconsciously, all of us, we do some
Use
kind
quant.
of quants in mind. When we
Correct.
build a screener on
Correct.
screener.in, that's also a quants. It's just that how deep and how long you are going in that journey, rather than just thinking mentally and just creating a screener.
Correct.
Somebody can just create a screener versus somebody who will tell, okay, why ROCE should be less than 10%, why ROCE should be more than 20%, why I should use ROCE, why not ROE. And then if you have a quantified analysis to have answers to all the questions, that is what is quant. And then of course there are different levels to do it.
Fantastic. Fantastic. You're talking about scientific investing,
Yeah.
you said.
So I started doing a lot of these experiments, and my realization was there's a lot of myths.
Uh-huh.
So many things we hear. In fact, you even on Twitter, you will see there are people who will tell never catch a falling knife, and there are people who will tell invest only when there is momentum, and there are people who will tell value gets created only you buy things at low. So a lot of statements are contradictory to each other, and it's not like one is right or other is wrong. One could be right in certain scenario, wrong in other. One could be wrong. So the idea was to get and test a lot of these things. So that is where I started analyzing, and I realized we are very bookish, and many of my learnings, they were very, very different from what is there in some of the books. It may not, what worked 20 years back may not work right now. So the idea was to do all these experiments and test every statement which is being said. And that is where I realized that, okay, fundamental is there, technical is there, but looking everything from a data driven perspective, I think that mindset is required. Everybody says buy when there is a blood on the street. How do you define what is blood on the street? Like your 20,000 followers on Twitter, that is your sample size, but that could be a very biased sample. So how do you quantify it? So ultimately the numbers have to reflect. If you cannot measure it, then it's good for nothing. So that is where I thought maybe I should start, and I started participating in some of the public events, presenting, and I felt I could do a little bit of contribution to the whole community. And with that, I started building content, and I have been a visiting faculty also to B schools. And while teaching, I realized the best way to learn is by teaching.
Correct.
So exactly. With that, I got motivated that, okay, let's do on the stock market side also, because many people, I was also young sometime, and when I came, I knew nothing. So if I can structure all of this, build a content, whether it is fundamental, whether it's technical, whether it's quant, where people can get things in a very structured manner, I am sure it will help in somebody's journey. And I am also learning as a part of it while building it. So with that intent, I started doing it. So I started building the content somewhere in 2019 and then kept building for almost 2 years. And then I thought, okay, it's getting very hectic.
Correct.
I should take a break. So that is where I decided, okay, it's getting very hectic and it's affecting the health. So I consciously wanted to take a 1-year break from job, finish some of this content, finish some of the algorithms I'm building, because to build one algorithm needs 6 to 8 months of iteration and regular testing, some 50, 60 versions. Then you need to operationalize. So it's a dedicated job and I wanted to do it. So I thought, okay, let's take a year break. Let's finish all of this. So that is what I'm doing right now from last 5 months.
Yeah. So this is the 1-year break, right?
This is the 1-year break going on. I mean, it could be 1 year, it could be 1.5 years.
Correct.
If things work very well, there is a financial side, you need to take care of family.
Correct.
If I feel that this career is lucrative enough, I can continue. If I feel, no, I am done with all the content building, I'm done with building my algorithms, automation, I still want to work, maybe I'll go back to work again. Have not finalized anything. We will see how it goes. So maybe sometime in 2023, I will take a call.
Got it. Fantastic. My next question to you is, how can the combination of coding, like you mentioned, right, Python, R, and the financial data help you to quantify and make better financial decisions with the same data?
So who can be the better person than you to answer it, because you are doing it day in, day out.
No, sir, you are an expert in that. So I'm not.
So see, thing is, what we hear. So I will take a very simple example.
Yeah.
When I started building my screeners on Screener, whether I'm building a screener for value investing or for growth investing, the first thing which came in my mind was, why I'm taking this metric, why not something else? And why I'm taking this value, why not something else? So one good part of data science is, and no disrespect to any field, but I felt I really like data science because we never believed in statements. The whole data science tests every statement. It takes every statement as a hypothesis, and then it validates whether it makes sense or not. And in that journey, you realize there are so many myths which are broken, and there are so many unknown insights which come out. So it helps you to think and question everything. So when I started building my fundamental screener, these kind of questions came to my mind. And I felt they're a genuine question. Why I should take a debt equity less than 0.5? Why not less than 0.4? What is the optimum debt equity? So that is where I started experimenting with data and doing all these things. And when I did, I realized there is a value which all of this brings. And all of this cannot be done without coding. There is little bit of coding which is required. So that is where I thought, okay, let's use the coding skill, because it helps you to do a lot of things in very small amount of time. And
it also helps you structure the thoughts.
Build your experiments, do your data analysis and all of that. So I started realizing, and one more thing is there. See, experience is very, very important in market. Only when you have gone through at least 10 years of bull and bear cycle, you will appreciate. Now, what this data analysis does is, even though you have not been in the market, and nothing can replace a real experience,
Correct.
but it can still take you and do a time
Correct.
travel and still give you a maybe 20%, 30% feel of what happened and why
Correct.
it happened. So many times in my tweets, you'll see if I am giving a 20-year chart of HUL, the idea is to go and live and ask why HUL underperformed for 10 years.
Correct.
And why ITC outperformed for 10 years. So data gives you that path to go back in time and live those times and then learn from it. So even though we will not have that experience, but maybe we'll get 30-40% of the experience, which will also help. So that is where I felt, blending both of them, it's very, very important. And you get lot of, and given I was a full-time employee, so I needed to find more efficient ways to learn. I was all 30 plus when I got into the market again. So if you need to catch up, you have to be faster, more efficient, productive, all of that. And I felt, this whole coding background is helping there. It is helping me to get out of some of my biases. I am shocked at some of the revelations which I get when I analyze the data. So I liked it and I kept continuing on that.
Correct. Oh, that's exactly true, right? When you look at, if you train an AI model to look at the previous 30-20 year data, it might not get the whole feel of it, but at least it will be 20 to 30% accurate. Like I also made a stock prediction model. I only tested it on a particular stock called Tata Motors, and then it predicted almost 30% of values right. That was pretty good because it has the whole previous 20 years experience of the data, which I think if you are not in 20 years, you might not get it.
Exactly. In fact, if you see some of the last 2-3 videos which I'm making on where the market will go, it's never about predicting a top or bottom. It is always about finding probabilities. And in every video, I'm giving some different indicator. So when you combine all these indicators together, build some kind of mathematical equation where every indicator brings and plays some role. If all the indicators highlight the same thing, that market is going to go up or down, that is where you get probabilities in favor, and that is how you get an algorithm.
Fantastic. My next question to you is, what are all the data points you look at? Like I'll tell you where this question is coming from. Like I think few months ago you had just tweeted about a Google Trends results about the word multi-bagger in it. That exactly matched with what the stock of index had performed, right? How do you get these insights about these data points? Because I could have never thought of searching multi-bagger word on Google Trends and getting the whole patterns of it.
It's all copycat, yeah. So if it's like you keep reading, you keep watch. So there is a purpose of being on Twitter. There is purpose of reading. So like if I can talk, if you see the kind of newsletters, DSP mutual funds they come up with. So there are a lot of interesting things people are doing. So it's all about watching here and there what one person is doing, what other person is doing, what this institute is doing. You do your own research. You read books. You read others interviews of stalwarts, and you get these hints, these indicators. I still don't remember from where I got, but I remember I saw somewhere talking about this word multi-bagger, and then it was there in my mind. So I ensure whenever I feel that some of my other indicators are giving a warning sign, I keep going and checking, okay, what this indicator is telling. So it's all about collecting your knowledge, documenting your knowledge. Like if you ask what are the patterns of market top, there will be 20 things which you can track, and the idea is to keep tracking it. Some could be fundamental indicators, some could be technical indicators, some could be quantitative indicator, some could be behavioral indicators. So this whole word of search of multi-bagger, this is the behavioral indicator of greed and fear. So you build your repository of checklist, and the idea is to keep going and keep checking it at those extreme times.
How's your investment philosophy like, sir? Like, how do you get the ideas? What is your idea generation process? And then from getting the idea, what is the whole process of researching the company? And then in the end, purchasing it?
So actually, it has matured a lot, and it has gone under a lot of transformation. And whatever I say today, I'm sure 4 years down the line, it will be very, very different from today. So let me give that background. So when I started, I was an ardent fan of, Pat Dorsey books. And in fact, I thought quality investing is the only way of investing, and there is no other way. So whenever somebody invested in companies which were little dubious or, little, not, growth missing or so-called mode, I always thought that's the wrong way. But only, when you network with people, you read more, you realize In fact, I hear this concentrated investing can make money, diversified investing cannot make money. Most of the generalized statements are wrong. You have n number of investors in the world who have generated returns with concentrated, with diversified, with technical, with fundamental,
with both combined also.
It's more about knowing the process. So when I started, it was more around pure fundamental side, more around quality, long-term investing at fair value. But over a period of time, with experience, I think I have started building multiple, different philosophies. So of course, quality at fair value remains, but there are times when I see there are industries or there are companies which are very neglected, lot of pessimism. I try to go and study that. So there are multiple ways of investing. Growth investing is different, value investing is different, techno funda investing is different. So as I am learning, I'm trying to build very mentally very separated investing processes, where I don't bring both of them together. So if I could invest in one company and I may not trade in the same company. I could trade in the company, but I may not invest in the same company because it needs a very different mindset for investing or trading. But I am trying to blend more or more fundamental and technical and doing these things. The other thing is I have developed a lot of appreciation for index investing, but I am doing it more algorithmic way by doing a lot of data analysis to identify, because I feel if you are generating 16% return without lot of research and very less volatility versus a 20% return with lot of research and little more volatility. So we can have both kinds of portfolio and both of them can play a role. So that is how I try to get ideas. I have my fundamental screeners, I have my technical screeners. So sometimes when you see something in fundamental screener and you see that is also in technical screener, you get more excited. Or there could be times when same company is coming in 3 out of 6 fundamental screeners. What if I am seeing the value because valuations are attractive and it's growing? It could happen. Maybe market is neglecting because of some reasons. So screeners are one way, reading books is another way. Like 2-3 ideas in 2018 I got from reading a single book. The ideas of like Oberoi Realty and some of these companies. Or you develop a network of friends and you discuss with them, you get ideas. Also, I think you are doing a lot of good work on the NLP side. You are experimenting. So I try to, again, some keyword search I try to do. So there are websites where you can go and, you can pick all the latest quarterly con calls and you can search for those words. Like, let's say you can search for EV or you can search for hydrogen. You can see which are the
I think Ankush Agarwal sir is doing fantastic work on that, Finside.ai.
Yeah, exactly. So, so I leverage a lot of those websites. Before that, when these websites were not there, I used to maintain my own Python code where I will dump all the 1,000 files and I will try to search for that. But nowadays I'm not doing it because I see you guys are already, you have created a very good GUI. So these are the ways. And once you identify an idea, then I have a very, defined process. So one, whether it's a bottom up or it's a top down. So like if I do a sector analysis, that's a more top down approach, but usually these screeners and all, this is more bottom up. So whenever a company comes, if it's a technical call, it's trading, it's very different. It's totally based on chart, but I will talk more about fundamental. So I have a 3-stage process, I call it. So based on the screener, I have built my own, Excel analysis template spread across 70 to 80 different metric on a 10-year basis. So that is the first level where I spend 1 hour just to understand if the numbers are, good or not, how is the trend. And I have a, capital allocation framework, you can say. So there are management quality, financial quality, business quality, risk and valuation. These are the 5 parameters. So there are rules. If there is something which is terrible in terms of management, I might trade it, but I will not invest in it. So there are certain specific rules around the company should have this much bare minimum criteria. There could be exceptions, but those exceptions also need to reflect quality. Like a very good company may go through a very bad period. And if I feel this period is temporary, I may not care about the current year return on capital. But in a generic investing, I have some 10-15 criteria. And that criteria also comes from, again, data-driven experiment. So if I can give one example, when you invest in a group of companies with working capital to sales ratio more than 40%, your chances to make more than 15% return will be very minimal.
Wow.
So when you combine 5-6 such rules, if you are getting a company where you're investing, which is not taking any of the things, your probability to make money is just 10%, 15%, which tells me my risk reward should be 7-8 times more, because the probability say on a generic basis I'm not going to get money. So you have to be very extra cautious. So that is why I have the stage one analysis, and once companies look good on stage one analysis, then I get into annual report reading. I go through 4-5 years of annual report. I try to read 7-8 quarters of conference call transcripts. Nowadays I give a lot of importance to technicals. So even if it is in downtrend I'm liking, earlier I will just start buying it. Now I take a small position. Maybe I will take a 0.5% position and I'll wait for the bottom to get created. But if it is in momentum, I'll try to take a position and do all of that. And then the third stage is when you do a competitive analysis. You read some of the competitor annual report, you do all of that industry report. But all the analysis will be around management quality, management execution, financial quality, balance sheet quality, P&L quality, the return ratios, the asset ratios, what is the future projection, what is the disruption, what is the risks, are the risks factors in the valuation, and then you take a call, and then you do the allocation.
Fantastic. I think the space that you hosted, me, Arjun sir, and Kundan sir, and Shivam sir also, right? There also Arjun Badola sir talked about, right? His investment philosophy also kept changing every year, every 6 months, and then you have to evolve with it. Like same yours, right? It's keep changing, and now it has
it happened. 2018-19 I didn't sell because one, I was too much into funda. Even though some of the technical indicators I knew, I saw them hitting, I just didn't sell because I thought only fundamental work. So it's only when you fail and you see, you observe, you realize the importance of things. So nowadays for selling, I rely more on technicals than funda, because my experience has been, there is so much of news you will never know, and by the time you will know, all that fall would have happened. So fundamental is good, but it's good from a 7-year, 8-year perspective. It is good when you are the first, you have the first mover advantage of the information. But if you don't have that advantage and you don't have the intellectual capability to know, why not to look at alternate signals? So it all evolves.
Fantastic. What are new projects you're working on scientific investing?
So something interesting I did. So 2-3 things I'm doing. So first, the content building part is going on. So
the YouTube and
I visualize 140 hours of content building across fundamental, technical, quants, and 100+ hours I have built. In fact, 2 days back, I finished my whole fundamental analysis course, which is almost a 50-hour course. So 40 hours of more content building is pending that I am continuing. Second, lot of algorithmic experiments we are doing, and now lot of Python packages and all we explored, and we realized that there is some shortfall in each of them. So we have built our own code to backtest.
Wow, like your own Python package?
Yeah. Wow. And all we need to do is go and change the buy and sell logic, and then everything gets generated. So if I have to try a different logic, I don't need to touch the whole code. I just need to go and change the buy and sell condition. So this is more for discretionary, not for the machine learning, because machine learning is algorithm building. Correct. I'm telling based on my domain knowledge or based on my experiments, I come up with rules. So now we are operationalizing some of those algorithms, and the idea is to, and these algorithms are not only on the stock side, they are also in the index side, and index not only in India, but US also. So if I have to take exposure on US, I realize that my experience is, too less and time to take a stock level exposure. But what if I can find 20 different indexes in US? What if I can find index for quality, index for value, index for technology, index for green energy investment and all, and then we can build an algo around it which works. So a lot of these things we are operationalizing, and we have an annual membership program where I plan to publish output of these algorithms, because algorithms are IP, but we can publish and one can track and watch. And for sure in the personal investing, I'll be using some of them. So that is the second thing we are doing. All the IP work we are trying to operationalize. The third thing I started dabbling is I took some 10-20 company con calls for last 20 quarters, and I've tried to do my own sentiment analysis around it. Some very interesting insights which have come, and it looks something where we should dig deeper. So I'm looking for a good intern, and I have told you that when you're done, you want to do an internship, let me know. So I'm planning to do, one round of experimentation on maybe 200-300 companies with 5 years on call data. And again, if something interesting comes, basically that will feed as an input to some of these algorithms, or again, indicators in terms of identifying if the sectors are topping out or they're bottoming out and all of that. So that is the third thing I'm doing.
Oh, that's fantastic. Like I think every coder's dream is to publish a Python package, and you are doing it right now. Fantastic. Do you have any questions for me, sir?
Yeah, so when you can do internship for me?
No, currently like I'm in class 10th, right? So pretty busy with managing show than academics.
Good. Finish your degree, and I would love to work with you. Let's do something together sometime. But one more question
Yeah,
which
yeah,
I have for you is
yeah.
like, post 10th, what are your plans on the investing side, on the career side? Given I think you have blend both towards technology as well as business. So how do you see, what are your aspirations?
Yeah, I think I will choose science for 11th, 12th. And after that pursue a BTech degree.
Okay. Good.
I think we can also take Twitter question and answers, sir.
Sure. Maybe if you can just,
Yeah, there's only one question, so I will ask it.
okay, let me just go through the question.
No, I will ask it myself.
Yeah.
So the question is from Rohit Madhukar Ingole. He's asking honest question. How can I make career in stock markets? Means it's not a primary income where we can depend on. So we have to do something for earning. And then with what we can invest. So how does it mean? In simple way, which ways is there we can concentrate only on equity?
So my understanding is his question is about building a career means having a secondary source of income.
Correct.
Not a primary source of income. My view is, and that is where I have a little bit of disconnect with, in the bull market, everybody wants to do intraday trading and all at an early stage of career where the focus should be something else. My simple reply is, see, whether you make 20% on 1 lakh or you make 20% on 1 crore, the return is 20%, but the amount makes a lot of difference, because to be financially free, you don't need to earn in percentages. You need to earn a absolute amount. That absolute amount for somebody could be 5 crore, for somebody could be 10 crore. And what is your base capital? That matters a lot. So my view is, in early part of career, the focus should be on generating income sources, on the job, on the career, on the skill set. But parallelly learning these activities, the investment or trading or whatever, that is important. So one need to maintain a fine balance. But my view is, first 5-10 years, the focus should be more on the job. Even if you are doing a mutual fund investing or index investing, it is good. Even if you're doing SIPs, until you are driven by greed, I think these things are good. Once you are building a decent amount of capital, which can help you to survive even without a job, then you should think of dedicating more and more time. And if somebody is able to dedicate more time, nothing bad about it. Or if somebody is able to efficiently use time. So people who are in technology, again, I would suggest them to leverage technology as much as possible to be efficient. But the idea is to spend more time on career on the initial part of life. That will help to build a bigger base. And on that bigger base, even if you are not generating a 20% return, you are generating even a 13% return. That will help to achieve the financial goals. So focus on career and start thinking in terms of financial goal. It's not about equity or it's not about debt. It's more about what you have to do with money in your life. So let's say if my financial purpose of life is, to own a 1 crore house and maybe a 10 lakh car. So I can say that, okay, this is the amount of money I need. So I know this is the amount of money I need, and to generate this money, this is my cash inflow, this is my income, this is my expenses. I may need to generate a 12% CAGR or 15% CAGR or a 20% CAGR. So that is how you should take a call, how much of money is required, and then to generate that return, what kind of asset classes you need to invest, and to do that, what kind of skills in the market you need to gain, rather than directly thinking about equity, because equity is a small block in all of this. And the bigger goal of life is not about generating return in equity, but it's all about what you want to do with money. So that is how you should plan, and then see how much exposure you should take in equity. Will the kind of return you aspire for, you can do only with mutual funds or index investing, or you need to take a directly equity exposure, and then slowly get into it. Maybe you start with 20% of portfolio managing directly, spend one bull bear cycle, get that confidence you can do it, then slowly increase it. And that will help to ensure, even if you don't make extraordinary returns, you will not fail big time. And if you are not going back in time by 2-3 years now, I think most of the times people, they miss it because they do one big mistake and they go 3-4 years back in time, and again they have to start doing things from scratch. But if somebody is consistent, disciplined, even a 2-3% lesser return, but if he has avoided the big mistakes, I think 10 years down the line, the journey looks very beautiful. So these are some of the things, you should do. And then over a period of time, they should work for you.
So that's the same thing that when Tariq sir and Ishmael sir came on the podcast, they said it's the same thing, right? That if you are in the early parts of your career, right, in 20-25, you should work on upskilling yourself. So that if you're upskilling yourself, you will get higher positions in your career. Ultimately, your sources of income will improve, and then you can have a larger capital to invest with.
Yeah. See, if you are so much crazy about equity, you will find time to, spend time on equity. It will become your hobby. So you'll stop watching TV and you'll spend that time. And if that is the kind of craze you have for 4-5 years, I think for sure you will do well.
Correct.
And then of course a time will come when your portfolio itself will become of that kind of size that you can think of, giving more time to this.
No, that's exactly true. Like if you love a particular thing, you will find any time to do it. And at that doctor, you would have done that activity.
And second is try to find ways where your career and this path, they cross each other. I think that is the most,
ignored part.
Most ignored part. And that is the most enlightening part for me, because I never quit job. And I have already told, it's not like I've permanently retired and all, but it's not like I got bored of my job. I still love data science and I love equity. And when you start mixing both of them, that is a bliss. So if you are able to leverage your skill on the profession side, apply it on your investing side, you are able to learn from it. Even in data science, I felt there are people who are much better coders than me. So I can't succeed with them in coding. There are people from ISI stats background and all who are better at mathematics than me. So I cannot, get ahead of them. But I felt business knowledge was something which I gained out of investing.
Correct.
And I could build my niche in applying analytics with the right business knowledge, because data science is a combination of business, maths, and coding. So you have to find ways where you can blend these two paths together. And if you are able to do that, then you'll start enjoying both of them and you'll never feel like quitting both of them. So take a call whether it is possible to blend or not. But I'm sure if there is some scope, try to leverage that, and then you will be able to, generate more out of, both these different areas.
Fantastic. I think this was a fantastic podcast. I thoroughly enjoyed. Majority part was the coding and the machine learning things you talked about. Love them. Thank you for joining.
I know you are building on Shodhi, you are building a lot of things, but are you doing something on the ML side also?
Yeah, I was trying to build, but currently I've stopped the project. I've shifted to core NLP. Now I think for some other projects I will start using ML, machine learning.
So one thing we were just coming and say spontaneous discussion came to my mind.
Yeah.
So there is a book called Capital Returns. And in Capital Return book, there is a chapter which says about capex cycle and what kind of returns are generated post the capex cycle.
Wow.
So if you see right now, there is a lot of discussion around which companies are going for big capex, let's buy them. But the book says something else. It says the reverse. When the whole industry goes for the capex, there is oversupply, and historical data says that over capex has not given very good return. And because you are doing a Shodh project only on the capex, maybe you should do a modeling and you should try to see historically how the capex cycle has played across sectors in terms of returns. So that could be an interesting.
Yeah, sure. I'll try to look into it. Amen.
Yeah.
Thanks for coming on the podcast, sir. Really enjoyed it.
Thanks, Jay. It's my pleasure. And I will always remember, I was one of the few initial followers of you, and I'm sure we'll stay in touch for a long time.
Sure.